Hi and welcome to today's More Report on Thursday the 9th of June with me, Richard Perry, market analyst at Hantec Markets. The European session has got off to a negative start, not hugely negative, but it is beginning to get slightly worse though. It's sort of opened around about 0.5% lower on the indices. That's now sort of gradually worsening. And my chart today is the DAX, and I'll talk about that in detail, but DAX continues to underperform. There is sort of a negative sentiment coming through the markets, and you've got this US dollar that remains under pressure, and that has sort of helped Wall Street higher, but certainly I think that it's not necessarily it's not coming through positivity. The dollar weakness is coming through the sort of lack of strength through the US data, which is driving the dollar lower. The Treasury yields are the main worry for me. Look at the 2-year falling away, but the 10-year is now broken back below all these April and May lows. It's now at 3-month lows, and it certainly does suggest, I think, that is the market really concerned about sort of growth still, forward looking, and I think that is sort of a real concern for markets generally, and I don't necessarily think that equity markets, for example, are going to be able to push forward in that sort of environment. Now what we have got is the oil price, which has also helped to support equity markets recently. Oil price going higher, that is again helped by the weaker dollar. This dollar weakness that we've seen in the recent days following on from that payrolls data. The weaker dollar helps commodity prices, and the WTI has broken above the key resistance of the October high, and that takes it to an 11-month high on the WTI, and on Brent crude, it's not far off its September-October highs, but still yet to get there, but still looks pretty strong, doesn't it? And I think oil prices generally looking pretty positive. You had again inventory drawdowns on the EIA report yesterday, which helped to support the market, and it's all looking pretty strong. But this weak dollar is the main sort of story, which is playing out through forex markets, through commodity markets, and also conceivably helping to support the S&P 500, but again, as I said, I don't necessarily think that is a reason to be positive and about equity markets, because I think ultimately the equity markets are going to be coming up. I think they're climbing a wall of worry. I know that saying's been said many times before, but I think it is the case, because I think that what we're going to find is that ultimately a big some sort of correction in these equity markets, and it could be coming soon. In terms of the economic data today, not a great deal. You've got UK trade balance at 9:30, expected to come in at minus 11.1, so basically in line with last month. And this afternoon we've got the weekly jobless claims 269 is the expectation there. So again, only 2,000 up from last week. That takes me to my chart of the day, which is the DAX. Now the DAX, again, as I said, I think it is trending higher over the last sort of few months. But I just see these overhead resistance barriers. I see the resistance from April, from May. The May one came in bang on the fib level, 50% at 10.373. And I think it's falling away. You look at these momentum indicators, you'd say that they are pretty much configured for neutral or sort of sideways trading, really. RSI finding support around the 40, turning over at 60. Stochastics, again, rolling over, seemingly sort of losing their way in that mini rebound that we saw following on from Tuesday's positive candle. But again, the MACD lines, they certainly don't really reflect what I would say is a bullish market. So I think that what we're going to see is another rolling over. You've already seen this gap up from Monday being filled. That gap resistance came in at gap support was 10.149. That's been filled, and if you see a closing element to that gap, then that's a negative, and I think that would be sort of seeing that the 1040 support would be tested, and ultimately probably a move back towards this uptrend support, which currently comes in around 9,930, which again is not a million miles off this old sort of key 61.8% fib level, 9,897. which has been a turning point consistently. So I think we could be coming back towards that sort of level on the DAX, and I think it looks a little bit corrective near term, having sort of rolled over again. And I think if you see a move below that 10,040 level, that would sort of confirm this 10,313 level as a lower high underneath 10,365, and that would again be sort of certainly putting pressure on that uptrend, and then possibly back towards these May lows again. So I think that what we're seeing is a sort of a turning over of the outlook on the DAX. I noticed the DAX is a big underperformer. It underperforms when the markets are trading lower, and I think it underperforms when the markets are questioning risk appetite as well. So that is something to consider as well. So the DAX is an underperforming market at the moment. So I wish you good luck in your trading on DAX today, and I will speak to you later.